Bitcoin dropped over $10,000 in just 7 days as investors panic selling triggered by massive ETF outflows. Thursday, June 4, 2026. Like and subscribe for daily market updates. Today's agenda: the crypto panic, stock market reaction, market snapshot, central bank policy, geopolitical risk, crypto asset breakdown. Now let's look at how traditional stocks are reacting to this same fear. Welcome back to Market Pulse Daily. We are looking at a very scary day for digital assets. Bitcoin has fallen from its all-time high of $74,500 to current levels around $62,700. That is a drop of nearly $12,000 in value. This is not just a small wobble, this is a major decline. Why is this happening? It is a combination of factors. First, we saw a massive exodus of money from spot Bitcoin ETFs. Over the first 2 days of June, investors pulled out $1 billion. That is a huge amount of cash leaving the market. Second, a major company called MicroStrategy decided to sell its Bitcoin holdings. They sold 32 coins at a high price, which broke the promise they had made to never sell. This caused a lot of worry among investors. Third, we saw a cascade of forced selling. When prices drop, people who borrowed money to buy crypto get forced to sell their assets to pay back their loans. This created a cycle of panic selling that pushed prices even lower. We also saw that large investors, known as whales, stopped buying and started selling instead. When the big buyers stop buying, prices usually fall. This creates a very negative mood for the entire crypto market. While stocks in crypto are falling, one safe place to store wealth is looking very strong. The fear in the crypto market is also affecting regular stocks significantly. The S&P 500 index ended the week with a loss, snapping a 9-day winning streak that had built up momentum. The index is now at 7,554 points. The Nasdaq Composite also fell, dropping to 26,854 points. This shows that investors are becoming risk-averse. They are worried about the Middle East situation and the potential for more conflict. When investors are scared, they tend to sell stocks to keep their money safe. We also saw that oil prices are moving in a strange way. Even though there is tension in the Middle East, oil prices are actually down. Crude oil is trading at $94.7 per barrel. This is confusing because usually, war makes oil more expensive. However, people are worried that the war might stop production in other places or that demand might drop if the economy slows down. The dollar index is also down slightly at 99.36. This means the dollar is getting a bit weaker, which can sometimes help stocks, but the fear of war is overriding that benefit. The big picture is that investors are reducing their risk exposure across the board. But why is gold rising so much while oil is falling? The answer lies in the central banks. Let's take a moment to look at where all the major markets stand right now. This is your market snapshot. First, Bitcoin is at $62,700, which is down 2.04%. Ethereum is also down, sitting at $1,750. Solana has taken a bigger hit, falling 5.38% to $67.7. XRP is down 4.54% at $1.1. On the stock side, the S&P 500 is at 7,554, down 0.61%. The Nasdaq is at 26,854, down 0.86%. The Dow Jones is also down significantly. Now look at the commodities. Gold is the star today. It is up 1.26% and trading at $4,490 per ounce. This is a huge move. Gold is a safe place to store wealth, so when everyone else is selling, people buy gold. Oil is the only other commodity we are tracking closely. It is down 1.32% at $94.7. Finally, the dollar index is at 99.36, down 0.17%. What does this mean for you? If you hold stocks or crypto, you are seeing a decline in value. If you hold gold, you are seeing a gain. The dollar being slightly weaker means it takes more dollars to buy a unit of foreign currency, but the fear of war is making investors prefer gold over the dollar right now. This snapshot shows a market in transition from risk-seeking to risk-averse. With central banks watching inflation, let's look at the big picture economic news driving these moves. The Federal Reserve is currently on hold. They are not changing interest rates right now. This is a cautious stance. The inflation data shows that headline inflation data is at 3.81%. Core inflation is at 2.75%. These numbers are important because they tell the Fed how fast prices are rising. If inflation stays high, the Fed might need to raise rates again. Kevin Warsh, a former Fed official, is expected to speak soon and might signal that rates could rise if inflation does not abate. This means if prices keep going up, the Fed will raise interest rates to slow the economy down. This is a big deal for borrowers. Higher rates mean higher mortgage payments and higher costs for businesses. The European Central Bank is also watching inflation closely. They are set to raise their deposit rate to 2.25% on June 11. They are balancing energy-driven inflation against a weakening economy. This means they are worried about the cost of energy pushing prices up, but they are also worried that the economy is slowing down too much. This mix of factors makes the central bank policy very tricky. Investors are watching every word from these officials to see if they will raise rates or keep them steady. Now let's look at the specific crypto assets that are struggling the most today. The biggest reason for the market decline today is the situation in the Middle East. Tensions are very high. Iran has threatened to bomb Israel if they bomb Beirut. This threat has caused a lot of fear. We saw a liquidation cascade in crypto markets worth $1.6 billion. This happened because investors were scared that a war could break out. When a war starts, oil supplies can be cut off and trade routes can be blocked. This is why oil prices are volatile. Even though oil is down today, the risk premium is still there. The risk premium is the extra price investors pay because of the danger of war. If the war gets worse, oil prices could jump up very quickly. Also, the SEC granted accelerated approval for a new Bitcoin ETF. This shows that regulators are still expanding the market for crypto, even though the market is weak. This is a positive sign for the long term, but it does not help the short-term panic. The fear of a spreading of financial stress from the Middle East is dominating investor mood right now. Investors are fleeing to safety, moving capital into gold and cash equivalents, while abandoning riskier assets like technology stocks and digital currencies. Finally, let's wrap up with the key numbers you need to watch for the rest of the week. Let's break down the specific crypto assets that are struggling. Bitcoin is the leader, but it is down 3.58% from yesterday. Ethereum is down 2.9% at $1,800. Solana is taking a big hit, down 4.19% to $70.7. BNB is down 3.67% at $613.8. XRP is down 1.64% at $1.2. All of these assets are falling together. This is called a market-wide decline. It means that no matter which coin you buy, you are likely to lose money today. This happens when the overall market mood is negative. The Fear and Greed Index is at 12 out of 100. This is called extreme fear. When the index is this low, it usually means that investors are very scared. Sometimes this is a good time to buy, but right now the selling pressure is too strong. The market is in a correction phase. This means prices are falling back from their highs. We need to wait and see if the selling stops. If the selling stops, prices might start to rise again. But for now, the trend is down. Investors need to be careful with their money and not panic sell if they are not ready to hold through a decline. Today was a very difficult day for investors. Bitcoin crashed from its all-time high of $74,500 to around $62,700. This is a decline of nearly 14% in just 7 days. The main cause was a massive outflow of $1 billion from spot Bitcoin ETFs. This was the largest weekly outflow since early 2024. At the same time, MicroStrategy sold its Bitcoin holdings, breaking its promise to never sell. This caused a lot of worry. We also saw a liquidation cascade where people who borrowed money were forced to sell their assets. This created a cycle of panic selling. On the other hand, gold is doing well. It is up 1.26% at $4,490 per ounce. This shows that investors are looking for a safe place to store their wealth. The S&P 500 and Nasdaq are also down, showing that the fear is spreading to stocks. The Middle East situation is making everyone nervous. If the war gets worse, oil prices could rise, but right now they are falling. The Federal Reserve is on hold, waiting to see if inflation stays high. Investors need to be careful. They should watch the ETF flows and the news from the Middle East. If the fear continues, more assets could fall. But if the news calms down, prices might recover. Thanks for watching Market Pulse Daily.